Thank you for tuning in to another edition of the PulseWave Report with yours truly, Dex the Algo Capitalist, aka the Vulcan, coming to you live from PulseWaveTrading.com, home of the world famous PulseWave Price Trigger Reports. Ladies and gentlemen, this is a special segment, a special edition of the PulseWave Report. Following up to what we discussed last night, we're going to look at a couple examples and then we're going to keep it pushing. If you would like to know our opinions on certain markets or what have you, the best way to get that information into your hands is by going to PulseWaveTrading.com. That way you can sign up and receive these reports on a daily basis. And you'll know firsthand what's what and where's where. We do not attempt to cover every market on these end of day reports. They're designed just to cover a couple of things, talk about a little bit of whatever is going on in the trading room, things like that, and then we keep it pushing. So I'll leave it at that. PulseWaveTrading.com. What we discussed here on these reports, at the end of the day, when we're looking at these charts, the reports have all the information and details that you see on these charts, plus much, much more. All right, so let's just get it on and popping, and then we're gonna end this because it is late and I am tired. All right, here we go. First things first, this is Apple Computer. All right, so as you can see here, Apple Computer is taking off. Here's your rally alert right here. It's the last rally alert. Here's all this upside production that you're seeing. But then you got this gap right here, okay? The market is going to, at some point, need to back and fill to close that gap. All right, so the higher you go, the more devastating the fall will be. Normally, sooner rather than later, markets like to come and backfill these gaps. If you take a look at at another example of this, it's back here. Here the market gapped up, right? Waited a few days, but then finally came down and closed that gap. But then it continued to fall. Another situation that we have here, sometimes it's hard to see things with the eye, so I have to get this out, the crosshair out. Let's take a look and see, did we close this gap? All right, it's not looking like we did, so hold on. Now I took the ruler out. Now I got to get more specific and take a look here. Okay, so 112.35. No, we did not. All right, so you got another gap back here that was created on November the 4th of 2020 in Apple Computer that was not reconciled. This bar here on November the 24th did not reconcile this gap. All right, on just a cursory glance, it kind of looks like it does when you look at the chart, but it did not. So we still have a gap way down yonder here that needs to be reconciled. All right, so you got some gaps. So you got this one, and you got this one. This is a minor one. This is a major one. And look how long the market has taken to reconcile this. So this is looking a little nasty. All right, looking a little nasty. Okay. All right. Let's move along. Okay. So the next one here we're going to look at is Tesla, another high flyer. Let's take a look and see what's going on here. All right. So here's your Tesla. We still haven't reconciled the gap that was done on November the 17th of 2020. That gap has never been reconciled. And the market has continuously climbed higher and higher and higher, producing another gap here, and here we go right here. So minor gap, major gap, minor gap, major gap. The higher it goes, the harder it's going to crash down and burn. Ladies and gentlemen, you need to understand that market gaps always get reconciled eventually. Just like pointers, whether they be bullish pointers or bearish pointers, they always get reconciled in the end. At some point, the market will reconcile those situations. All right, you normally want to see it sooner rather than later. It'll have been good if it would have reconciled this after a few days, came down here and closed the gap, and then continued, but it did not. It ignored this gap. You create another one here where you ignored this gap here. All right, this stock eventually is going to fall a lot. And you need to understand that. You see all this flip-flopping up here? All right, like it's creating a top. You got to look at that too. You got to trade what the market's giving you. You cannot ignore these situations. All right, you do that at your own peril, ladies and gentlemen. You ignore it at your own peril. So do not, I repeat, do not get punched in the jaw by the market because you did not follow the rules. Okay, I'm just giving it to you the way it is. Trust and believe this when I'm telling you. At some point, these markets are going to top out, not because I say so, but because you have gaps on these charts that have yet to be reconciled, along with some pointers and others. All right, this next one here is Facebook. So, as you can see, Facebook has finally come down, right, and crashed. We got all the way down here to sub 245 when we was up here at 300. Then you got a rally alert here, and you got all this upside production looking pretty, right? But you created a gap on January the 20th of 2021. Here's the gap right here. This gap has not yet been reconciled. At some point, this market will need to fall to come down to this level and close this gap. All right. It's looking like we have this enormous trading range. Here's the support. Here's the testing of that support. Market comes back up. You're just in a range. The low is the support here. The top of the range is the high here. This is a wide range. Ladies and gentlemen, you got like 245 to like 295, we'll say, okay? 245, 295. All right, so you basically got like a $50 trading range going on in Facebook right now, and that's an enormous trading range. All right, so you're gonna definitely need to follow the alerts. When you get those rally and crash alerts, you need to follow them, and you need to follow them good. All right. All right, next up, what we got, last but not least, we'll end our segment today with this. Do you recognize this chart? This is GameStop. Been all up in the news, right? But before this market was doing anything, it was doing nothing. All right, here you go, way back here, right? All right, so before this thing hit the news, we got our last rally alert was right here. All right, on January the 11th of 2021, you got a rally alert. This is back when it was a $20 stock. This stock has gone from $20 all the way up to $159.18. Now, if you are a PulseWave subscriber and this is one of the stocks you like to trade a lot, you got blessed this week because the rally alert came back here. Then you got a secondary rally alert right here on the 19th. And then you got all this upside production, right? What a blessing. All right, so you made out real good. You're looking really good if you're a PulseWave subscriber and you were able to capture this. But you know the rules. You gotta pop your way through it. Will it continue to run? Who knows? But chances are, normally when you get these super hyper parabolic bars, where you have a day where a stock goes from $61 to $159, yeah. And then you get the inside day bar on the following day, but the trading range is $80 to $150. Yeah, at some point there will be a correction. Now, just looking at this chart here, though, you want to know something interesting? There are no gaps. This market didn't gap. There was no gap. This was just normal trading. Look at the bar. No gap. No gap at all. Therefore, this market can continue to run higher if it wants. There's nothing saying this market can't run. You can also make the argument that this bar is a bullish pointer, a monster bullish pointer, which means this high will be taken out, probably sooner rather than later. But this is an enormous range to be trying to get in here and do a little something, something. So what you're going to need to do is follow the pulse waves, look at those intraday price inflection points, and do what it do. Okay. All right. So you know what it is. Now they've been saying that, because of the, social media, Reddit, like I told you in yesterday's end of day report. What did I explain to you? Retail specs ain't about nothing when you take a look at the global market. Remember, the market is global. Retail specs are a microcosm of the entire market. The market is ruled by big money, large institutional money. That is what pushes the prices around. Little retail specs ain't about nothing. They always want to blame the retail spec for everything. If a stock goes up, oh, the retail spec. If a stock goes down, oh, it's those short sellers, those retail specs. Retail specs get blamed for everything. Retail specs ain't got no money compared to these large funds that are in here buying this thing up. And I'll tell you, like I told you in the last report, I believe a lot of this buying was the Fed turning on their computer and letting you know that they are buying stocks and futures once again, propping up the market. GameStop, we know, has been in decline for some time. All right, this particular company has been getting hit hard because of people being able to buy their video games online, getting digital copies. So they've been taking advantage of all of that, right? That's what this has really been about. All right, that advent. Okay. So the other part of it, though, is GameStop does serve a purpose. You don't want to see them go anywhere, right? Because where you're going to trade your games in, that's the only place that you can really go and trade your games in for new games. Let's say you're a little low on cash. You don't have that $60 to $100 to buy that new game, right? So you go in, you have a whole mess of old games that you're not playing no more. You beat them, whatever, and they have very low replay value. So you go ahead, you turn those in, and by the time you trade in those 30 unused games, you got enough credit now to get yourself one brand new game. So there you go. You dump those 30 games that you don't need no more, and you got enough credit now to buy that new game for free, basically. So that's what you do. You trade in the old to get the new. So there you have it, right? You can even bring your old systems in, and they'll take those. It was a place to really swap, And I tell you, I got a lot of games for basically nothing, because I would trade all my stuff in. That's what I would do. And now they got the power up rewards, and you get $5 off on used games, or $50 off, or whatever. A lot of little savings and stuff in there. So they do serve a purpose. This is one of those companies you don't ever want to see go away. But they've been losing their shirt because you can go on, the Play Store, and you can download games. Also, they were competing with GameStop. You go to the online store, like the PlayStation Store or the Nintendo Switch eShop. They would be having mad blowout sales on games. You know what I'm saying? And if you're a member with PlayStation, you get a couple of free games a month. Sometimes 2, sometimes 3 games a month, free. And I ain't just talk about no indie titles. I'm talking about AAA game of the year titles. You know what I mean? So it's hard for GameStop to compete with that. But the other good part is that GameStop, if you want physical copies, you can go in there and get used games, at a pretty reasonable price as well. But there were times when GameStop would really compete really well with the online store, the Play stores. But let's be honest, in the past, couple of years, man, online stores have been killing it. I've seen games as low as a penny on the Nintendo eShop. A penny, and you like, what? Get out of here. A penny, $1, $2, $4, $5. Same thing on the PlayStation store. $7 game, $5 game 85% off. The digital deluxe golden platinum edition game that was $180 is on sale now for $19.99. That right there, that'll make a person go ahead and click download. You know what I'm saying? So it's rough, to compete because GameStop is a brick and mortar, so they got that overhead part right there. So it can be a little rough. It can be a little rough. I get it. But if you look here, look at this. This is a monthly chart of GameStop. You can see what I'm talking about. This was really no high flyer. This has basically always been a $20, $30, $40, $50 stock. You know what I'm saying? At best. And then all of a sudden you see this bar here for the month, how it just, came alive all of a sudden. Okay. This is how the tech sector looked back in the 1990s. All right, back in the days of Cisco Systems and JDS Uniphase and Tyco and WorldCom and Microsoft and Yahoo, So I haven't seen a stock bar like this though since those days. The last time I seen a bar like this was when Yahoo went from $20, $30 stock to a $300 stock in less than 30 days. And it looked like this. Haven't seen that since then. So that's, 30 years ago now? So when you start seeing those days coming back, like when a GameStop, a company that was basically on the verge of bankruptcy, coming back from the dead like this is something different. People buying up bankrupt companies. This is different. This is something different. All right, this is different, y'all. This is different. So, I had to show you this. That's why I zoomed out and put it on a monthly chart so you can see. This stock was practically dead. It got down to $3.15. You know what I'm saying? $3.15, man. $3.50. That is like, red alert. You didn't drop below $5. Once a stock drops below $5, it's usually out of the favor of the big, the big money. And any stock below $5, they're not even looking at. Traditionally speaking, they're like, because your stock is priced that way for a reason. It's never going to go up. See what I'm saying? So this right here is pretty much paranormal, supernatural. This is a super parabolic bar that you just don't see every day in any market. So you need to think about one more thing before we conclude today, and that is, if a market can go up like this in a month, remember, this bar can go in the other direction in a month too. So wait till you start seeing that kind of panic. When you start seeing a stock at $160 drop down to $5 in a week. Okay? Just wait till you see that start happening. So, happy times are here again. Everyone's, happy. And I know I keep saying it till I'm blue in the face, but this is one of them times, man, where you're going to need the PulseWaves more than ever before, man. I'm just keeping it 100 with you. You're going to need it. You're going to need it. I don't see how you can navigate these waters without it. You don't want to be at the mercy of the talking heads on TV because they don't know what they're talking about. All right. And even a lot of these hedge funds and stuff, they're not really making any money. They're making money for themselves. They may manage a $100 billion portfolio, but they're not really making no money like that. See, they make money whether their clients make money or not. They don't share in the losses. They only share in the profits. But when they're losing money, they're still getting a check cut. All right, they're still charging their clients. So that's totally different. All right. So anyway, that's all I got, you guys. I just want to point some of these things out to you. because to some people, not all of these things are always as apparent and can be difficult to navigate and understand at times. So I just wanted to throw that at you to help you out a little bit and that you know what's really good. What up? I see you, man. I see my brother made it, man. I'm glad you made it, man. Thanks for coming up in here. Don't forget to smash that like button. Yeah, these are really interesting times. That's all I gotta say. All right, so another thing I want to point out too, this may be one of those times too where you also take a look at the loaded reports. I never did a loaded report on the equities because one of the reasons why is because equities gap so often, and then you got the overnight and extended hours trading and pre-market, and it's just a different beast. So I never really saw the need for it. Plus, you got the pattern day trade rule. You only get 3 in and out round turns, in a rolling 5-day period before they smack you with that pattern day trade rule. So I wanted to avoid that because majority of people they're not going to even fit that criteria anyway. So I didn't want to get nobody hemmed up. But a situation like this, all I can say is when you see a rally alert or a crash alert on the report, just follow what it says. All right, and just be ready. Have your orders ready. That's all I got to say. Have your orders working and ready. All right, and then you can get lucky like this, like a GameStop, and you can catch this. All right, it's almost impossible to know what stock is going to pop at what day or time. The rally and crash alerts are there to help give you a clue, though. That's what you're looking for. You're looking for anything that has a rally alert. That's what you're looking to buy for those of you that trade equities. You're looking for any stock that has a rally alert. If it has a rally alert, get ready. That's what you're looking for. Okay? Same thing if you're looking to short some stocks. If it has a crash alert, go ahead and follow the instructions on the report and get yourself in position because chances are you're going to see that downdraft come. Okay? Yeah, I will be posting more equities in my watch list. I really will. Primarily when it comes to equities, just so you know, I like trading the NASDAQ because it's electronic and I can usually, get pretty good fills and things like that. So I like trading those techs, pretty much those things that have really good, volume and liquidity, and it got some movement on it. Like why would I trade a DBA? For those who don't know what DBA is, that is the agricultural ETF that barely moves. It moves like UUP, which is the US dollar. Why would I trade the UUP or DBA when I can trade a Facebook or, when I can trade, an Apple or an Amazon or, a Google, you know what I'm saying? So I like stocks that move, you know what I'm saying? That's what I like to do. But the only thing is, when you're dealing with stocks, like I say, I don't trade them that often. Is that those gaps and earnings or some news comes out in the middle of the night while you sleep, and when you wake up in the morning, you turn on the television and they say, Acme Incorporated stock is halted for trading. The market ain't even open yet, but it's halted. The pre-market in the pre-market, the stock dropped 25%. And pending news is coming. We don't know what's going on, but the stock closed yesterday at $50 a share. This morning it opened up at $8 a share. Everyone's panicking and throwing up, and more news is coming. And you're one of the guys that bought the stock and went long at $40 yesterday, and now it opened up at $8 today. And let's say you may have been like, I'm a big Willie, and I'm buying 5,000 shares. Forget that, And now this morning you wake up and you throwing up. You know what I'm saying? So yeah, that's the only thing about stocks. And the way I designed the PulseWaves is I hold a position overnight, all positions. I don't care if I'm trading a stock, futures, forex, crypto. I hold overnight. I hold it at least one day, at least one 24-hour period, at least one night. I hold over. Because if I got a rally alert, chances are that next day is going to be a mighty continuation pattern, and I'll be able to get my money. And then at that point, I'm just moving my stops and locking in profits and stuff like that. So, but the only downside is, like I said, when you're doing these equities, anything can happen and it can upset your trading plan. You can have the best trading plan in the world, but you know, this could have easily gone the other way. This parabolic bar could be at zero right now or -0. You see what I'm saying? So that's the only thing I hate when it comes to equities, because you only get 3 in and outs in the same day on a 5-day rolling period. What if I bet on 5 different stocks today and they all did well enough to the point where I just want to get out and take my profit? Well, guess what? I won't be able to take profit on all 5 of those. I will have to choose which 3 I want to take profit on, and then I won't be able to do it again for 5 more days. See how stupid that is? If I want to avoid the pattern day trade rule. So yeah, in that regard, equities can be a little whack because of the limitations. That's why I like trading the futures. That's why you don't really see a lot of equities on my watch list. All you see is my futures, because I trade futures like day in and day out, like clockwork. I'm always in the Dow futures, S&P futures, NASDAQ futures, Russell futures, crude oil futures, natural gas futures, soybean futures, wheat corn futures, and the micro euro, micro British pound, and the micro Aussie currency forex futures. Those are what I trade every day. And sometimes I have positions on or orders working in all of the above I just named. So that's why you don't see a lot of equities on there, because I'm not, it won't let me be nimble. They won't let me move the way I want to move. See what I'm saying? So anyway, I digress. That's all I got for now. Smash that like button. You know what it is. And remember, bulls make money, bears make money, and pigs get slaughtered. So remember to take what you can and give nothing back. And I am out. Purge.